Hello and welcome to another episode of the Energy Connects podcast. I'm your host, Chiranjib Sengupta, and this episode is part of the ongoing ADIPEC series on energy markets and geopolitics. Between the ongoing market volatility and a global supply chain that still remains stubbornly fragmented, energy infrastructure is being redefined as a strategic asset. As a recent ADIPEC white paper highlights, this shift is driven by the high concentration of global oil and LNG flows through a limited number of maritime corridors, as we have seen with the Strait of Hormuz, where disruptions can rapidly amplify through pricing, logistics, and supply security. Joining us today to help us decode this new reality is Grant Dougans, partner at Bain Company and the chair of their Global Energy and Materials Center. Grant, welcome back to the Energy Connects podcast.
Good to see you again.
Thanks very much. To start off, we meet during quite an extraordinary time in light of the Middle East conflict. What is your view on how the energy infrastructure, the focus on the energy infrastructure has changed, and do you think it has become more critically important in helping build long-term resilience?
Yeah, I think if you were to spend time, for example, in energy ministries or folks who are deep in the industry, I think the critical importance of resilience is pretty widely understood in the role of the energy system in providing that resilience. As you think about what may have changed or what is changing over time, and of course, this is still very early days. 5 to 10 years ago, many companies assumed quite liquid markets, the ability to trade globally. And I think as we talk to our clients, see what's going on, again, early days, just the question of how liquid are these markets continues to become more front and center. And what does resilience mean for you in light of your natural, as from a country perspective, the resources you have, or if you're a company, the assets you have? That conversation is evolving as the conflict has started to occur. And of course, it's still early days. So how it all plays out depends a lot on how the conflict plays out as well. But certainly energy is a critical part of resilience. Infrastructure is a critical part of resilience. What that means depends a lot on the world around all those critical assets.
Now, what are the strategies that you would advocate, to fortify energy infrastructure and supply chain resilience in such a fragmented world?
Yeah, one of the things, this is our third time talking, you and me, and I think we do this each year around when we do our annual survey of executives, 800 or more folks. And this survey we did this year was before the conflict starts. But I will say, front of mind for executives is the concept of competitiveness, durable assets over time. And I think it's still early days to determine how what's happening, again, which is primarily a human tragedy, will impact how companies think about capital allocation. Most companies right now are focused on safety of their folks who may be in the middle of the situation. But again, as we talked about, the concept of liquid markets, and it used to be the case that you could have an asset and assume that as long as the molecules could flow, that you'll get the price you would like, or that things would be relatively liquid. In terms of downstream of that, I think increasingly we're seeing our clients thinking ever more carefully about things like the midstream structure that goes around the assets they have. How do they monetize the assets? What are those specific physical supply chains? Because, over the last 3 to 4 years, we've had situations around trade, which was a whole supply chain dynamic, which is one version of resilience. Obviously, other energy challenges we've had over the last few years. So really challenging planning assumptions, really thinking through what are the physical flows of the product that we have, what are the physical inputs of the product that we have, what are the risk exposures, and then how do we thoughtfully mitigate those risks in light of where we are over time.
An excellent point. And then, you mentioned the annual report, and yes, we've been discussing it for the past couple of years, 3 years now. This year, what are the key takeaways from there, Grant?
Yeah, so we started to touch a bit on these in the earlier part of the dialogue. Executives across all these industries, again, we survey agriculture, chemicals, mining, oil and gas, and chemicals. Is focused on competitiveness and thinking about how do we drive affordability and competitiveness with the assets that we have front and center. We talked a bit about resilience. One of the things that we increasingly see, we ask each year, where do you want to invest your dollars? increasingly we are seeing executive teams focused locally on that. If you would have looked 4 or 5 years ago, you would have seen companies contemplating global moves to different countries. Increasingly, we're seeing in the survey results, executives saying, I want to focus on my region. I understand the politics. I understand the material flows here. So we do see increased regionalization in the way that executives are thinking about where they want to put their resources over time. Um, Restructuring and industry restructuring is likely to continue. We do see from executives, particularly in the chemical space, that's likely to continue to occur. And then lastly, we did talk a lot about AI, which seems a bit odd to talk about in the context of everything going on, but it is another important broader trend in our sector. And we would say executives are telling us they're excited about the opportunity, but really 80% of energy executives have not seen any results from AI yet, which is telling.
Yeah, that's I think very significant comment. Now, going back to one of your earlier comments about the hydrocarbon sector, do you think, in light of what we are seeing and with the focus on energy security, this will once again sort of put the spotlight on investing in hydrocarbons, at least for the medium term?
Obviously, hydrocarbons are particularly affected by what's going on at the moment. You see, if you were in the solar development industry, you might see less impacts from what's happening. So obviously, what's occurring is a material dimension relative to hydrocarbons. Going back to your first question, both for countries and for countries, the question is, what do you define as resilience? What does that mean for you? And for some countries, that may be hydrocarbons. For other countries, they may interpret that and say the answer is less hydrocarbons over time and more exposure to things like nuclear or renewables. And so it's really, again, it's probably too early to say, but the countries' views of resilience are deeply informed by the resource they have available to them. And so I do expect that we'll have countries thinking about and companies thinking about what does resilience mean given the assets and the resources they have.
And finally, Grant, about investments, how do you see that geopolitical swings are reshaping investments in real time? And what's your outlook on the sort of, you refer to M&As, the potential consolidation that you expect across the industry?
Yeah, again, I think it's probably too early to think about exactly how things like the conflict are impacting capital plans. But broadly speaking, you think of the broader arc of what we see and what our clients are seeing, the concept of the world's becoming less global is clearly there. I don't think that's any news, but we see that in the results. The concept that we need to have assets that are durable and competitive through whatever may occur is certainly front of mind. The question then becomes, how do we build a resilient portfolio in light of the specific risks that we face, given the industry that we're in, and quite frankly, the country that we're in? And again, when we talk to executives, we surveyed 800 of them, very clearly focused on how do I navigate that? How do I think about investments in my region? And probably a little more trepidation about when you're moving beyond your region into newer spaces.
Grant, it's been such a pleasure speaking to you. Thank you so much for joining us on the Energy Connects podcast.
Thanks, Chiranjib. We'll see you next year.
Thank you so much. That was Grant Dougans, partner at Bain Company. Thanks for watching, and you can get comprehensive coverage of the energy industry and more interviews and podcasts like this at energyconnects.com. Don't forget to follow us on social media and subscribe to our newsletter for regular updates. A big thank you also to our production team who's working behind the scenes to bring these episodes to life. Thank you, and I'll be seeing you soon on the next episode of the Energy Connects podcast.